and let's put the spotlight on gold then, as promised. And although gold has corrected a tad bit of late, yellow metal is still up nearly 30% over the last 1 year. Escalating geopolitical tensions, strong demand from central banks globally, and dovish stance adopted by central banks have led to the surge in gold prices over the last 1 year. But even after the surge, brokerage houses continue to remain very bullish. UBS expects gold to touch $2,900 per ounce by the end of 2025. To understand the rationale, we now have Joni Teves, Precious Metals Strategist at UBS Investment Bank, now joining us. Thank you so much for taking your time out and speaking with us here on ET Now. First up, UBS expects gold to touch $2,900 per ounce by the end of next year. Help us understand what are the factors which will drive the up move in gold?
So we think gold can continue to rally here. The factors that have been supporting gold in 2024, we think will extend in 2025. We think that ultimately an increase in gold investor allocations will drive prices higher. We think that despite gold's popularity in 2024 and the rally that we've seen, there is still a lot of room for investors to build positions. We also think that the official sector, central banks, and other official institutions will continue to be net buyers of gold. And then finally, we think physical demand, particularly from key markets like China and India, we think will be resilient to higher prices. So all in all, a supportive fundamental backdrop and an increase in investor gold allocation should see gold make new highs in 2025.
Supportive fundamental backdrop and investment purchases that are being done by India and China are some of the reasons why gold could continue to surge. But apart from that, what are the downside risks that you see to this estimate of $2,600 per ounce?
The biggest bear case for gold in our view would be if we get a reacceleration in US growth, potentially driven by extension of fiscal policies. And as US growth reaccelerates, inflation moves higher and the Fed reacts with tighter monetary policy, that could push gold prices down in our view.
Understood. So these are some of the factors that could probably push gold prices lower from current levels and versus your target of $2,900 per ounce by the end of 2025. But December rate cut expectations also continue to come down. How do you view this factor, and does UBS expect slower pace of rate cut than anticipated earlier? And what impact will it have on gold prices in the short term, say next 2 to 3 years?
We think that Fed cuts will actually continue into next year. And I think this remains sort of a supportive backdrop for gold. Our US economists only took out one rate cut from their expectations. So not that much different in terms of the level of rates that we're expecting by the end of the year. I think for gold, the key is that the expectation is for real rates to come down, and therefore that means that holding gold as part of the portfolio becomes cheaper. So in that perspective, it remains a supportive backdrop, and I think investors are still incentivized to have a proportion of their portfolio in gold, given a more volatile macro backdrop and persistent geopolitical risks.
Understood. But when we look at gold as an asset class, gold has given lower returns as compared to equity over longer time frames. Do you believe gold should be looked at as a diversifier in the portfolio rather than an asset class to maximize portfolio returns? What will your view be as far as gold as a diversifier is concerned?
I think it's hard to kind of really isolate gold's role. I think overall, there are periods where gold contributes more strongly to returns, and there are periods where its role is more of a portfolio diversifier. I think in this environment, gold has been quite resilient, and positions have been quite resilient because it's been viewed more as a diversifier, given increasing uncertainty in terms of the macro backdrop, economic expectations globally, geopolitical risks. Having that allocation to gold and having a diversified portfolio has become increasingly attractive, and I think that's why there's such an interest in gold.
So gold will continue to be an attractive diversifier in your portfolio. Thank you so much for taking your time out and speaking with us here on ET Now and giving your thoughts on where gold prices are headed for the next 1 year.
If you like this video, then like, share and subscribe to ET Now.